Everybody, welcome back to Markets and Sectors. My name is Mike Fairborn. It's great to have you back here with us. Hey, today, folks, I did want to look at a couple of different January effects and what might that mean for the rest of the year. Of course, we've got the January effect. We've got another one in there, too, to take a look at that might tie in a little bit, interestingly, with seasonality. So looking forward to going into that with you, along with some recent earnings beats. Want to take a look at what we got this week. There's plenty of earnings misses for sure out there. We did have this week as well. Some data from the Fed, got some notes on that. Plenty of things to take a look at today. So dive into that just momentarily. All right. And with that, everybody, I'm joined in the chat by a good friend, colleague of mine, Connie Hill. Great to have Connie on board. I'm sorry, it is JB. Is it JB? It is JB. Okay. Yeah, I had Connie listed. Awesome. Okay. It is JB. So, yeah, one of my best friends, JB. James Boyd, you'll see him in the chat. Great to have James on board with us, folks, as always. Always teaching great stuff. And by the way, I encourage you to take a look at his X handle, James Boyd CS. If you're not already, following him, follow him there. You can follow me at Mike Fairborn CS as well. But good to have the gang on board. All right. And some new folks as well. All right. I do some plenty of familiar names. So let's get the show started here with some disclosures. We got plenty to look at. All right, information here is for general information purposes only. And paper money software application is for education purposes only as well. Now, investing does involve risk, including for some products more than your initial investment. A quick glance there at some of the futures disclosures. We will look at some of the futures, some interesting moves on futures, no doubt about it. And one that I actually picked up on JB from yesterday, caught something interesting on silver, actually, and it ended up being quite the dip as well. So I know he's posted that and other comments. I actually did repost that on X as well, but interesting stuff. By the way, just a final note here, past performance, no guarantee of future results. All right, well, let's take a look at it here. That was one company that did gap up higher. No doubt about it. We've got GLW coin. That's one we'll take a look at here in just a moment. Did get above that century mark. Just as a side note, it was just one of those that did beat earlier this week. Anyways, we are heading over here to the S&P 500 index. There's your move right there. Still holding below that 7,000 level. See it pretty clearly right there. This is a big round number. We've inched up higher. I have to say this. So we have to give credit where credit's due. It was, in fact, at the end of the day, we got to say, it was a higher high. We did dip back down a little bit. And in my book, right now, that is a higher low. Now, what's interesting about this, you guys, and I spoke to this a little bit last week, is when the apex of that triangle does meet, let's pull that guy down a little bit. You can see it meet right there. Sometimes you'll see a change happen right at the apex. I've just seen it for the years. Now, it doesn't happen every time, but over the years, I have seen moves that could start to occur there. Will we get a move here? Because what did we get just before the apex, folks? We got a lower close. Now, this is a lower low intraday, of course, right? But will we get a recovery from here? That's really the key question. In fact, if I take a look at it right now, I'm just going to pull this guy back. Oh, let's readjust our chart real fast. You can see, let's get us a full chart. Yeah, clearly a long upward trend. We got another one over here that was an ascending triangle to the upside. But will we get a higher low? I mean, we have been getting higher lows, and so sometimes that's what traders will look for. Let's scoot over right now and take a quick look at our market posture. Just big picture here, where we do look at short term. That's our yellow line. I'll just say short, intermediate, and long term. The long term right there. We're holding above all of those. And a quick note too, looking at the 50 on a daily chart, we like to start off with first because, well, we like to look at the dailies. The daily is a good reference. I think most of us do look at daily charts initially anyways. Look at prices pulling back, back. Very close again, but the S&P has delivered thus far. That's the key word. Now, she's got to keep delivering, right? But it is a higher high. It's a higher low. And we'll see if that apex really does matter. We are clearly above the 100 and the 200 here. But for the bigger glance, lastly, market posture. Move on into our weeklies here. Now, the weekly, we do take a look at the 10. As you can see right there, it's a 10 weekly. And it is interesting when the market really does get clicking. It can really hold above the 10 for weeks at a time, not days. These are weeks. These bars over here, these are all weeks. So when you look at this, yeah, look at that. I mean, the quarters are flying by over here. Those are quarters through months to the end of the year, and we were holding above that 10. There was a crossover here, and some will look at that, but right now we're just referencing kind of like intermediate term weekly relative to long-term weekly, and there you go. The two we look at here for market posture. In other words, are we seeing a risk-on situation in the market or a risk-off, folks? Right now, it's been close to that level, but sometimes it does operate closely to that level, as you can see, over different time frames. As we are holding above it, bounce, 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 we're still above it again. Will we get started here? We're going to take a look at that because perhaps there is something with the January effect that can give us some insight as we look into this a little bit further. But that's the first part that I wanted to mention to you right there as we dive on into it. Now, let's talk about the January effect right now and actually the January barometer. There are two that traders will look at seasonally for indications of a move. Now, the first thing I wanted to state is that when you look at just straight up the S&P 500 right here, January can be a bigger month, and some of the drivers behind that are tax selling at the end of the year, and then to get maybe perhaps a tax benefit or towards the end of the year, and then they'll repurchase back in January. Okay, and that can help lift the markets a little bit. Now, historically, it's revolved really around, also small cap stocks. We've looked at the S&P 500, but it also looks at small cap stocks and says that small cap stocks will perhaps outperform large cap during the first part of the year as well. So there are a couple of components in here, and one of the ways that we can look at this and to kind of just get a general sense of will it continue in the future is, what are we seeing on the charts? Do we see a trend? Do we see higher highs, higher lows? We're seeing that on the RUT for sure, the Russell 2000. There's no doubt, right? But the S&P, we kind of already reviewed that trend too, right? We zoomed in, we looked at that. We can see that, yeah, higher high still, higher low perhaps, or perhaps a continuation of the trend on higher too. So that's sort of a key point to watch here. Now, one of the things that we do like to do within this class for sure is I'm just going to show you two seasonality before I go into the January barometer, because there are a couple in here to focus in on. But if I just take a look at quick seasonality here, under style, under chart mode, and lastly, under seasonality, so just following the mouse all the way through there. Let's go ahead and make this a percentage comparison. There we go. Where does it stand? Where are we standing? What do we tend to have historically? Well, we do see, and I've talked about this before, but yeah, there's tariffs in here that really negatively affected March. There is COVID. I don't want to dive into too many details on there, but these really did impact the last 5 years of the, seasonality on the S&P 500. And by the way, that'll impact 10, that'll impact 20. Those were big enough moves to the downside, tariffs and COVID that happened right there to push the markets down. But seasonally, oftentimes we dried up to March, but there you go. It's this move coming up right here that we're looking at. And it does show right now, yeah, about mid-February, but oftentimes mid-March, even all the way to the end of March, if you knock out COVID and the tariffs from last year, okay, you'll see that. So it is interesting to see. Now, the January barometer, that's the market hypothesis that returns in January will tend to predict the rest of the year. Now, again, it's going to be based on sort of like expectations. If it happens enough times in the past, it can happen in the future. Again, what I'm going to revert you back to on that, by the way, that phenomenon is just associated with the S&P 500. So strictly tied to the S&P 500, but what I want to refer you back to are a couple of key things. That's going to be the trend of the S&P, the economics, the financial economics and then, of course, the financial fundamentals of the individual companies. We'll take a look at earnings beats here over the past couple of weeks here in just a second. What companies beat, what companies are performing. But before we do that, before we actually move into some of the industry analysis, what did we have this week? Well, we had an announcement by the Fed that kept rates flat. Now, if you ever wanted to come in here and take a look at this, I'm just going to highlight this right now. We can't go into economic data right up top. And as it says, by the way, at the bottom, this product uses the FRED API, but is not endorsed or certified by the Federal Reserve Bank of St. Louis. So you can keep that in mind as you go through here, but we can pull up all kinds of different data, as we go through and we look at interest rates specifically on the left-hand side, just to see where we might be at. You can see there are a ton of different interest rates. The one I'm looking at here is the Fed funds rate. I'm just going to type it in right there, the Fed effective funds rate right there. And if you type it in, you can actually see it. And this just gives us a long-term history, a trajectory of where those rates are, where they have been. It's kind of interesting. A couple quick notes and key phrases of the Fed, although they didn't change rates, they did say economic activity is expanding at a solid pace. Generally, that's considered to be a positive, right? A positive. Now, while we do this too, by the way, I'm just going to throw this in to the chat box just so you guys have this symbol, but there you have it. But these were some interesting notes. Although they didn't raise, and that's sometimes what all investors will look for, what did they do with Fed funds? I think it's really interesting to see what their data is showing us about the economy. And why do we want to know that? Well, it ties back into the January effect potential, the January barometer, the macro fundamental financial, the macro fundamentals, really. Macro econ, right? Will it go higher? I've just got a couple on my other screen I'm going to read off here to you. It says, so I mentioned, economy is expanding at a solid pace. Economy has once again surprised us with its strength. Now, there were some things that the administration put in place, I guess already last year, right? With their bill that could influence positive growth into next year. Okay, they refer to it as the Big Beautiful Bill, the BBB, and you're starting to see some of that, but it did surprise them with strength. So a lot of economists are saying, well, the big surprise could happen this year. We'll see what that means. We don't know, but some economists are stating that. Uncertainty about the economic outlook does still exists. Inflation remains somewhat elevated. They did say they're going to maintain the target range for the federal fund rate, what we just looked at right here. Retain that range, which you guys have all access to, which is great, between 3.5 and 3.75. And that's where we're at right now. Now, just a quick reference to this, we do need to look at the 10Y over here, because this, I know, is a great reference for a lot of traders, investors, just to kind of get a general sense. What does the 10-year look like? We're using futures here. But the 10-year, this is the micro 10-year yield. And what does that yield look like? Well, the yield has actually been showing some strength. In fact, we just broke above this longer term range. So the 10-year yield is still at the 4.2% range. Nothing too small, really. I mean, it's still there. It did dip as low as even below 4, but people are still getting returns on their money markets as well, right? They're obviously in some of these areas. And by the way, I did just note that there was a survey posted in the chat, folks. If you guys get value out of this class, consider doing that survey. It's just 2 questions, very, very straightforward. Just 2 questions and some comments in there. I look at those. My manager looks at those comments as well. 10 you liked it, 1 you hated it, whatever the case might be. Great to have you all here, folks. And also, if you're getting value, smash that like button and be sure to subscribe to our Trader Talk channel. Okay. All right. Well, where are we? Well, we're not going to go too much further until we do look at the macros, because there's a lot going on over here. The dollar has been down substantially. Now, when the dollar deflates, so I'm just going to do this. I'm just going to say dollar D for short, dollar down. I want you guys to remember this. There's something that goes up generally. Now, not every time, nothing's 100%, but it tends to, over different historical time frames, increase asset values. Now, is the S&P 500 an asset? Absolutely. Companies, corporations, they are assets. Assets can go up. This is the dollar going down, assets going up. But we also know too that it can have a big impact on commodities such as gold, such as silver, such as copper, on down the line. There are several that can also, because what are we talking about here? Yeah, this lumps in over here, and a lot of times there's been a lot of discussion specifically around commodities being positively impacted by that. So let's take a look at some of those right now. Okay, first off, there is our gold right there. There's our gold. And there's a little bit of a dip in the gold right there, but generally speaking, it's been a pretty big upward trend. This is referencing back to that tweet that JB had sent out yesterday before we'd seen some of this. Just an interesting, a few things to take a look at here. But you know, there's one thing, you guys, that I think is really, really important to mention, and that is sometimes when you see an acceleration of the trend, and I don't know, for the past quarter century, yeah, I know, I've been in the markets for a little while. I've seen this happen quite a bit, enough that I began to say, recognize it and kind of respect it a little bit. But if you begin to see massive accelerations occur, okay, like for example, just even in this general trend, if I'm just drawing trend lines across here, what are you getting here? A little bit of acceleration, and then even a higher acceleration. Do you see that? I'm drawing the lines. It's accelerating. Well, we can do that again over here too. An acceleration of the trend. I'm just drawing trend lines to help me here. And yeah, look at this. Whoa, that's up there. Now, if you start to see massive acceleration, don't be too shocked if it begins to go the other direction too, because volatility, once it starts to rear itself, it's great when it's in your direction, whatever that direction may be. But a lot of times when you get higher vol, you do tend to get share prices that can go up and share prices that can go down. In this case, contract prices, right? We're talking about futures here. But yeah, across the board with stocks, you might have seen that. It's referred to sometimes, and we don't know if this is going to be a top, but I have heard the term like a blow off top. And I think a lot of folks, I mean, that's just a big whip right there, right? In silver. And so one of the things, I just plant that in your mind just to be mindful. If you see this, commodities, futures contracts, stocks, if it's up high like this, you've really got to watch it close. Now, sure, could it continue to accelerate? The answer to that is yes, it did too. But the fact that it can reverse and reverse quickly means that we need to kind of have it top of mind. We need to be really mindful and not just wake up, at how can I say it, 10 in the morning and say, oh gosh, look what happened overnight. I mean, if it's something that you're looking at, it's just, you can kind of expect that it might not just be up every day when you wake up later. You got to really kind of glue in on it, but just expect that. So one of the things is, if you're buying higher here, you can always expect maybe a dip. Anyways, you just don't know when that's going to be, but I've just seen it a lot. It's rare that it just shoots up like that and just holds and keeps going up indefinitely, right? All right. So there we go with that. Now, I just want to look at just a couple of more just real quick because there are a lot of things going on. There's HG right there. Big move in copper as well. How did crude hold up right there? Crude has been down. Remember, crude really didn't participate in a lot of these moves. And we're going to see real quick here that energy is one of the sectors that's showing some interesting strength right now. So we'll see how that goes with this. Last but not least, while we're at it, here is our VIX. Our VIX did shoot up. Yeah, we saw some market moves, no doubt about it. Where's the S&P right now? Just looking at the ES. So it's down a little over half of 1% right now, looking at the NQ2. You can see us coming down right here. A little bit further down, I'd have to say, with the tech companies. Well, yeah, there you go. About 1.5%. So yeah, basically very close, approximately 1% higher, roughly in that range than the S&P 500. So some things to be mindful of here. You guys, I always bring this up because I think it's so important to kind of keep in mind. But if you come over here and we just look at the Magnificent Seven, I again have created this long Magnificent Seven was a cool little feature we can do off of the Thinkorswim platform, and that is just these just add them together. There are the seven. These tend to kind of give some pretty good insight because they are, we're talking about a market weighted index, and so these are the big ones, the big stocks. If this starts to move, oftentimes, historically, what's been the case in many cases, in many situations, is that it is continued to trend up higher. If this trends higher, it may in fact lift the NASDAQ. So just keep an eye on this. This is a long one. Somebody asked me last time, Mike, do us a favor and just throw that symbol into the chat. There it is. If you don't like to type all those out, there you go. Just copy that, put it in. But I put them underneath the Magnificent Seven because it's done a pretty good job at telling us when, let's say, for example, the NDX itself, and also these are big companies in the S&P 500 could be on the verge of going higher. Look at this. Hey, since we've been looking at this, I'm just going to go short term. It has been dipping over this time frame. In fact, I think if we look at a 5-day, 5-minute, there's your little pullback. Okay. Sometimes time of the day matters too, and sometimes time of the week matters. A lot of traders will say that, we'll frequently pull back on a Friday. We might bottom on a Monday and start to go up higher. Real key point here is can we make a higher high, higher low? Let's zoom on over here right now and just narrow this down into a more minute time frame. This is the sector grid on a 1-week basis, as you can see. Here's energy over here. What has been going using market sensitivity? What's been moving higher relative to the S&P 500? So not just on a relative basis. True it is. Every one of these is relative. If this has been going up, for example, or up over here, we have a few. Here's another one. We want to zoom into these and take a look and just see what sectors they are this week. In other words, what I'm saying here is higher highs, higher lows coming into play here. Remember, it's doing this relative to what the market's doing. So is this showing strength? Absolutely. The market's going down. It's kind of hard to see. We just looked at it, though. It's going down, but we're also, like I said, narrowing the time frame down. Let's zoom in on this right now and see what we've got. There it is. I put up these little banners previously, and I'm working on a ThinkScript diligently. It's a little trickier than your regular ones, but I'm going to have it sitting in here. I'm going to try to have that for you guys next week, okay? So when you go in and we're looking at this micro kind of visual of sector performance or rotation, really the sensitivity of sectors, I'm going to have it sitting over here. So yeah, we're going to be able to see it over here. It's going to be cool. All right. That's our goal, though. Developing ThinkScript that's useful here for us. Okay, let's go ahead and do this. By the way, I mentioned ThinkScript. I just have to state, even though I'm not sharing anything, ThinkScript's not guaranteed for time and accuracy. I'm just talking about symbols here, but wanted to slip that in. Okay, there you go. Look at it. Here's Tuesday. There's Monday. I'm calling that a trend up. Higher highs and higher lows and reversing higher again. Energy. Click again, down, up, financials up. Do you see it? Higher highs, higher lows. It's performing. Think about what the Fed has done this week with rates. Now, this has been down, discretionary, basically down this week. Staples coming back up higher. We can easily spot what's happening in this group too, right? We can see what companies. These are all S&P 500 stocks in here. There you go again. Healthcare. Well, it's okay. It's bottom maybe. I mean, it's bottoming. We don't know if it'll bottom or go back up, but we can be watching it into next week for highs. Here's the one I was looking at. Here's another one that's been trending up. Industrials. We're going to pick a few of these, just a couple, so we can run through the process and just see what's been sticking out. Here it is. That was the one I really wanted to look at too. Consumer. Ooh, yeah, all the way. That's, I think, our biggest one. Communication services, not consumer. Communication, very much akin to technology. In fact, I'll start off with this one first because I just want to see what's going on. I just want to see, and it's so easy because we already know what we want to do. We are right here. Let's just see what those companies are so we get a good glimpse at what's going on into next weak perhaps, and will that relative strength continue? Because that's what can often tend to happen. When we get this here, showing the strength relative to the market, we tend to sometimes get it here, 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 especially if it's relative strength, a relative strength move. Not necessarily just the chart move, but relative to the market. Okay, scan tab, stock hacker, really important here. Scan in. We were just looking at those sectors of all those companies that are in the S&P 500. You got to be here. Otherwise, you're going to get a totally different set of companies. There's your 500. Okay. Now we just come down here, industry. I know many of you guys are experts at this, but you could just come in here and find out what's been moving this week. Communication services, point again, we did it. That's it. Click scan. Okay, we didn't do it. You still got to click scan. I do have my 5-day percent over here, which is something that comes within the platform. I've got a 1 year as well. But if you guys like the colored one, I can share that too. But Verizon, do you guys know that Verizon's been doing well? We spotted this from minute sector changes, on a very short-term basis. Meta is doing well. In fact, Meta is down 3% today. Not terribly well. It had a big day yesterday, up I want to say $60+. But let's look at some of these just real quick. That was one that performed. I didn't know. I mean, we've got T-Mobile in there too. So the carriers, which have been down, let's zoom out of this. I'm just going to go to my daily, weekly, monthly right here chart, and I'm going to go into T. There we go. Earnings. Okay. Could there be maybe some revaluation coming in here? Perhaps. Will we continue this long-term trend of the upside? Maybe. So if that January effect, if that barometer effect comes true, we're now scoping down into, from markets to sectors to companies, to try to see if expectations could be improved based upon financial earnings as well. Financial fundamentals, as they like to say, as opposed to economics, which could still play a role. But there you go. Boom, boom, boom. That right there, you guys. Now, this is one of the early candlestick patterns that I looked at. Do you guys recognize that? It's a 1, it's a 2, it's a 3, soldiers up. They call it 3 soldiers up. And a lot of times after this, you might get a consolidation, but that's a big move for this stock off of the bottom relative to any other prior moves. And if you get earnings to do that, perhaps it's time. It could be showing signs. I don't know if it's time. It could be showing signs or indications to some traders for maybe a higher high. Oh, do we rest maybe down here? Do we get a higher low? Now, dividends can be cut at any time, right? But this is a company that does pay dividends. And what's the price been doing? Down, 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 down. What's that going to do to our dividend yield? All else equal, key point, if they keep paying out that same dividend amount, dividend yield should be higher, even now, because we're down from these levels, even from that point. Obviously, it was higher down here, but what does that dividend yield look like? Right there, 4.24%. Now, I'm not saying that some traders would just want to try to gather a dividend and keep it. But what about sometimes traders are just interested because it attracts a lot of income-minded investors, and that's where these dividends type stocks can start to look like growth stocks, because you have a whole group of people saying, I want the dividend, I want the dividend, I want the dividend. That can play a role. Oh, by the way, I did see it from the chat. Yeah, let me share that with you guys in just a second. The sector grid, I'll throw it in here for you in just a second, okay? By the way, what did Riceberg just say? Exactly. Dogs of the Dow. It's part of Dogs of the Dow, and that was a strategy we looked at the first of the year. Okay, we have that in place that we were looking at, but I think that was the number one. Well, okay, it was top of the list for the highest dividend yield. VZ, right? Yeah, VZ. There you go. So, by the way, if you want to correct this, I'm just going to remove the bar just for now, just to get rid of it, so you can see. That's the move that you're getting on Verizon. I call that a fairly big move relative to these other moves. Could it start a change in the trend? Perhaps it could. we might have a fundamental change to go along with it. What was the other one? It was, oh yeah. So we had, oh, it's got to load up here. Meta, of course. Yeah. But go through here. It's really interesting for what this might mean into next week, next month, a few months out in terms of that trend. There you go. Yeah, we're down actually 22 today, but we were up, I want to say 60 something previously right there. Still kind of holding in the range, but it looks to be kind of heading down. Down, but flattening out. So who knows what that means for Meta through February. But yeah, there's your gap on earnings right there. Okay, so back to that real quick. Let's get to it. I do save this. This will always be in the description field under the video. If you click on more, I'll have it posted down there for you guys that are viewing this in the archives. But let me just share this right now. Share the grid. It's not a think script. These are just grids. But I'll just state that think script's not guaranteed for timeliness or accuracy. But here is the weekly sector grid. Okay, so that is in the chat. You could just, once you copy that, go into setup, open shared items, post it in there, save it, and then you'll find it under the grid charts, because it is a grid chart. Remember, key point, when you open something up, you've got to go into what it is, whatever it references. This happens to be a grid chart, so there you go. All right, I have a longer term one as well, and I post both of those. But there's a weekly, and then again, yeah. So keep that in mind. And there is also just the standard sector grid that I have here too, which just shows the. I'm sorry, that is the sector grid. I want to just look at the regular grid, like a rotation. No, that was rotation. This is it right here. This is just 6-month charts. So we're looking at sensitivity short term, but here are the longer term charts. I'll share that with you guys as well so you have it, okay? Again, these are just charts only. The one I'd shared, yeah, previously, it's 5-minute, thank you, Wiley, 5-minute charts, weekly only. We're just trying to pick up on where the changes might be, where the strength might be into the next week. Because it's Friday and that's what we want to start looking at, right? Okay, now coming back to that January effect, but let's look at one more. Let's look at one more group. Another one that was really quite strong as we were going through here. We did look at financials. Industrials were holding up pretty well. By the way, if we just look at the industrial charts right here, oh yeah, what do we see? Kind of a little bit of a potential flag formation right there. Industrials, what could be there of interest, and what can we see specifically on those charts? Well, let's go to it. All I need to do is just go right back, because I've already got this set up, in the Stock Hacker. I just need to select a different industry. That's it, and then hit scan. Gotta always hit scan. But here are the industrials right there. A lot of industries within here. You can scan for those. I like to just select the top one and then just organize it based on where was that weekly performance coming in that was sticking out that we could see pretty clearly on that 5-minute chart. What was moving? Southwest Airlines, TT. Now, these guys had an earnings beat too. TT did, Trane Technologies, a company I'm not really that familiar with. I just haven't even seen it that much. But here are your performers right there. And what I like to do is just do this. Go ahead and let's take a look at them. Just see what's going on with those. In fact, what I can do, I'll just do this real quick. I'm going to go over here. Let me just detach this. This is really helpful too if you've got 2 monitors. Just detach it, put it on a separate screen, a separate monitor screen, whatever. And then just go back to your charts now, and then you can see what you've got on there, because we want to be able to see it on a chart. So now all I'm going to simply do is just go through a few of these and quickly see them. Okay, so here they are. So the first one, yeah, that was LUV. Okay, so yeah, keep in mind, could this trend continue when you're looking at it? Maybe they're not great buys right now, but maybe you might consider a setup down the road. So perhaps a good watch list group of stocks to keep an eye on. CHRW was the next one. That was up about 10%. on the week. Okay, earnings related as well. So keep in mind, these are companies that likely beat earnings and they're higher as well. This one may be on the verge. Maybe a little hard to say right now because we did pull back a little bit today. In fact, that was a fairly big pullback. It's kind of a shooting star right at its resistance level, but will it hold? Will it bounce? That remains to be seen. Of course, the markets are lower too. This is the one I want to show you though. This is TT. That's trained, and that one too did bounce, as you can see. And if you point right there, you can see the earnings. So it slightly beat earnings, but the company's been down for a little bit, and perhaps higher high, higher low here could possibly start. You can see the extent of its run. It's been really quite extensive to the upside. There's a little consolidation here too, but traders might be looking for a resumption of that trend. Just as an example, earnings could help us with that. We are in the midst of earnings season. Let's just hit a couple more here. Here's LMT. So defense, Lockheed Martin is a big one. JCI in our group. Okay, not earnings yet though. They had a good performance this week, but no earnings, kind of some consolidation at the top. Anytime, you see these companies that have run up for a while, but yet they end up holding a lot of their gains. They hold it over here. It does make one wonder, they've held a big run. And so maybe they have been able to build up earnings. There was a big earnings gap over here, just as an example. And it's holding here. There was a gap down too. But if earnings come up, is that enough earnings momentum over a period of time that it could start to be kind of a longer term flag pattern and start to go higher? That's the question. Of course, it still has earnings. Now, another one I'm just going to throw just kind of off the cuff. And now this is outside of the group, but this is NVIDIA. Notice too, it's been, I think we have a paper trade on this one. That's in a different class, but I'm just saying, here's your run up. That's July. Right there, that's July of 05. If I draw a line through July of 05, folks, I kind of ran up a little bit. Didn't mean to do that. We're back down here. We haven't done much since that time. Could earnings over this time frame have grown enough that if they start to kick into gear, they start to trend up higher and make this just like a giant flag? That's the question. Some traders will look at it. All right, I think we've gone through a few of these. Again, if you ever wanted to look at companies that are hitting their earnings, or what I should say, what are reporting earnings, what have already reported earnings, you can come over here into Market Watch Calendar. I've got the S&P in here. I did that by clicking on the wheel, and then you can go in here and just see, hey, what are the companies? What if they've already reported, which ones beat, which ones didn't? You can see that in here too. It's kind of a great way to get into this. I did have a couple more companies that I just wanted to highlight for you that did beat their earnings over the last week or so. PG, this has been down for quite some time, but it did hit a number over here, and I guess we're up on the day. Yeah, we're up on the day relative to the market, so it's performing relative to the markets. We also had SYY, Cisco. This is the other Cisco, food delivery truck company. Massive earnings there, pretty big move. NRTS, NRTS. I've got the wrong symbol. I apologize. Let me go ahead and go to GLW. And this was the other one. I think we saw this one earlier, but this was another tech company that actually ended up breaking up and doing quite well. I mean, in terms of the earnings, again, will it hold maybe a big round number like 100 and go from there? Remains to be seen, right? All right. Well, so park all these in the back of your mind when you're thinking about the January effect or the January barometer. What else can we tie into it? What sectors are strong? Which companies are showing good earnings? Not to mention, are the markets performing and doing okay? This has already seemed to bounce back already, so it's been very, very volatile. It's still kind of holding in this range, though. We're not going to end this week without volatility, folks. I hate to say it. It's just going to keep going. It's been very, very volatile over this range, but some key notes, advanced decline line right there, higher. This again speaks to market breadth. This is the NYSE. 2,700 plus companies in the NYSE right there. If it's going higher, and there are a lot of smaller companies in there that don't have that, big market weighting, I'll tell you what, if they can gain traction, it can help. And oftentimes that's necessary for these longer term trends to continue. That's breadth in the market. Okay. Now we have been coming down a little bit. Again, if the McClellan goes below the minus 100 and back up above the minus 70, McClellan himself says for the market, even though this is a gauge on the NYSE, for the S&P 500 or the SPX that we've been looking at, the index itself, that's a 2 to 3 week rally. Oftentimes is what suggests, or longer, but generally within the 2 to 3 week time frame. You can go back and check this too. Okay, check. Just see over those time frames. But that's what's been used. And by the way, the summation index summing this together over a longer time frame, higher highs and higher lows. I know it's dipping a little bit right here, but it tends to ebb and flow. The whole idea, though, is upside. So that's 1, 2, and 3, possibly, particularly down here. We'll see what happens with the McClellan. If it continues to go sideways and bounces, then that could be considered by some traders to be a positive as well. Next up, there it is, JB, the socialized index, or the socialism index, as he likes to call it, where everything is equal regardless of its size. And it's holding up pretty well, isn't it? Yeah. Collectively, it's there. You've got a high, and you're just kind of consolidating it. This has been making higher highs and higher lows. So again, an interesting read on market breadth. Now, have we seen any of the Hindenburg-Omen spikes? Again, this is on our weekly chart, where the 52-week and the 52-week high, we see a large number of both. We don't, and I would not expect to see this either, especially with market breadth increasing. But look at that. We haven't had any. That, all else equal, is a positive. So breadth playing a key role there. Key thing there is the trend down plus these Omen spikes can cause an issue, no doubt about it. Just kind of go through. Yeah, that was our seasonality. And okay, that's a short-term look at the S&P 500. These are helpful for a more minute look at what's been happening in the markets. And lastly, I'm going to state this here too. This is the NASDAQ equal weight to the NASDAQ. And if you look at it, where's the equal weight? The socialized version of the NASDAQ, it's at highs. And all else equal, and what did we see too with the Magnificent Seven? Plus, all those sevens in there. What did we see? More strength in the NASDAQ itself. Plus, when you equal weight it, we're getting breadth across that 100. You guys see that right there? That is the symbol right there. It's a long one, but there you have it. Okay. All right. Okay. Well, we hit a lot of stuff. There was a lot of stuff going on this week. Again, always organize your thoughts around, could it continue going forward? What else do we have fundamentally? Macro, micro fundamentals, and then a number of indicators that we looked at today. Folks, again, if you found this useful today, give us that thumbs up. That's what I care about in terms of, just gives me a good sense to know that, it is useful for you, what we're going through here, and helping you plan out into next week. What might be happening in, small scale, what could turn out to be longer term scale. Be sure to follow us on the Trader Talks channel on YouTube. And lastly, if you could let's see, that survey link, there's just 2 questions in there. If you get a chance to fill that out, that would be fantastic. So, all right, everybody. Well, great being with you. Have a fantastic weekend. We are there. Appreciate it very much, JB, for your help as always. You guys take care. See you next time.